Hello and welcome to the Revenue Leadership Podcast by Topline. I'm your host, Kyle Norton, CRO at owner.com. And every Wednesday, we dive deep into the strategies and tactics being used to drive success by the best revenue leaders in the world. So join me as I sit down with revenue operators to discuss actionable frameworks that you can implement in your business today with no fluff, no sales pitches, and no platitudes.
This episode is brought to you by Pavlov. I'm excited about this one because as a customer myself, I can tell you it's a game changer for revenue. We all know acquisition is critical, but how much revenue opportunity are you missing post-sale? Pavlov's AI agents plug directly into your entire GTM stack to find opportunities and take actions that grow revenue from your existing customers, whether it's accelerating time to value, driving expansion, or proactively addressing churn risks. For us, Pavlov cut our customer time to value in half and increased our revenue activation from 70% to 90% plus. This product is insane. Learn how Pavlov can accelerate your NRR growth at trypavlov.com/Kyle. That's trypavlov.com/Kyle.
Today's guest is Tom Hanrahan, who's the EVP and Global Head of Sales at Square, where he's been for the last decade in increasingly senior roles. Prior to Square, Tom held senior leadership positions in sales at Living Social, Amazon, after cutting his teeth at Aramark back in the day. And we are going to talk all things sales efficiency, sales profitability, how to build a more modern type of sales team. And so I'm really excited about this one. We've been talking about it for a while, so I'm excited we could get you on, and appreciate you joining me, Tom.
Yeah, thank you, Kyle. Thanks for having me. I know it's been a process to get this scheduled, so excited to be here.
Yeah, it always is. So what did I miss in your background? Just give people a little bit more color on the sales leadership journey, and then we'll dig in.
Oh, man. I think, for me, I've just always been a salesperson at heart. I mean, I remember when I was a kid, I sold my stuffed animals door to door in my neighborhood so I could buy my mom a Mother's Day gift. And then in college, I was a first generation college student and was looking at a lot of potential debt to pay for school and bought a PA system on eBay at the time. It was a little sketch. I'm surprised it even arrived in one piece, but then taught myself how to DJ and was, for lack of better terms, a professional DJ in a small town of Cheney, Washington that helped pay for school. So always selling myself or selling a service or a product. I'm very entrepreneurial. And then when I got out of school in 2008, just kind of fell into sales. Thought I was going to get into marketing and fell into sales, and rest is history. Really loved the journey ever since.
Nice. Isn't that the story for all of us? Just like falling into things. Where is Eastern Washington University?
It's Cheney, Washington, which is about 30 minutes from Gonzaga, which is probably the more popular college in the area. They have the great men's basketball team, and about 40 minutes from Idaho.
Okay, all right. Now I know where you're talking. Very cool.
Yeah.
So we're going to talk about sales efficiency today, and I think this is one of the great debates in revenue leadership right now. In my mind, a little bit of a false binary. However, people keep framing it as like profitable, efficient growth or venture capital style growth, and I think you can do both. And I'm sure you'll agree. There's ways to grow at venture capital speeds with a winner take all mentality without burning cash in an irresponsible manner. So I'm curious, as like a warm up question, what does efficiency mean to you in sales teams? How are you thinking about it conceptually?
Yeah, I think, you nailed this a little bit and kind of the lead into the question. I think the first piece is like, what is the goal? Are you running after market share? And it's like, hey, we need to go get, 80% of the market share, 30% of this segment to have a tipping effect, and then box our competitors out. And then I think that can influence how you invest. But for us, it's Square, what we think about for efficiency is really, how are we measuring every dollar that goes into the program? And how are we thinking obsessively about productivity and about, hey, if you give us $1, we can give you $3, $4, $5 back, to just prepare for, the the uncertainty that is, in our space, the SMB mid-market space, but the uncertainty of, growth and competitors entering the market, and the uncertainty of, I think, how we think about overall headcount investment as a company. So for us, efficiency is really just about make sure we measure every dollar. We have a clear strategy around how we're going to do that, and then we are consistently scrutinizing that investment, whether it's in specialization or whether it's in more just cold sales, headcount, or in leadership, et cetera.
Yeah. Very much aligned with that. And so you mentioned before we recorded, sales is a big math problem, and also that like large sales teams are inefficient. What do you mean by large teams are often inefficient?
Yeah, it's kind of it's a little bit of a controversial take to get some response to it. And I say it to my team all the time is, in my career, in my experience in all these different companies, typically when you have a massive sales team, there are just lots of inefficiency gaps that you cover up through manpower, through having more people throwing out the problem. And I think it's one of those things where, we try to condition and train my sales leaders, and it's not about, where should we invest more headcount? That's typically what a revenue leader will do, right? It's like, hey, I'm going to go spin up and launch, our EU market. And when I spin up our EU market, I'm going to get, productivity from these 5 reps. But as a leader, I'm starting to think, how can I build specialization around it? How can I kind of build this program up and get more headcount? And we want to flip that. We want to think like, how can we get leaner and more efficient so that like 2 things can happen. One is that we have more pool to invest when it's the right thing to invest in. That's just the math around kind of the bottom line. And then the second thing is, when you come from a lens, in my opinion, of being really lean and efficient in how you operate, you have happy salespeople because there's more. When you think of the capacity planning, there's more leads coming through, there's more opportunity. So then you can really see that tenure curve start to shift. Where I see the inverse, when you build a team that maybe you hire too fast, or you threw a lot of headcount at a situation before you had some proven models and consistency and scale, you have the opposite. You throw people, into the ring, and it's the same stuff to eat off of, and at some point you just see diminishing returns. So for me, I get very skeptical when I look at large programs and large teams that I either inherit or, for us that we're starting to build and get away from some of those core principles and how we think about scale, and start to look at like where's there redundancy and where's the opportunity to be more efficient.
And was there like a specific part of your career or a story where this started to crystallize? Like where did this come from?
Yeah, it's a great question. I've been fortunate. Like my career summed up is, I had the opportunity to work for some great companies and be surrounded by just incredible leaders and operators that are still mentors to me today. The 2 that stick out to most, Eric Sager, who was my first VP at Square, and Alyssa Henry, who was the CEO of Square, where I worked for several years. The 2 of them looked at everything, like look at sales as a science and looked at revenue programs as like a factory machine. And if you've ever read The Goal, it talks about like, where do you isolate, the different problems and the factory, and then how do you fix that? And so before that, I was at, Aramark and Living Social. We're both very much sales driven cultures, which isn't a bad thing. Like that was one, a ton of fun to be a part of. And then 2, some really, strong frameworks around how do you build soft skills? How do you, own a market and get, deep market share penetration. And that was kind of the first part of my career. And then working at Amazon and then later Square with these leaders, really helped just condition me and prime me to be an operator first. And I'm sitting here in a wood shop as we do this interview. So I'd be remiss if I didn't say, the measure twice, cut once analogy, but that's really how we think about, growth. And for me, because you want it to be, when you're building a revenue program, and I think you guys have done a great job of this, Kyle, at owner.com from what I follow, it's like you want it to be scalable, repeatable, predictable. And that's across all segments. If you can't provide that, there's a disservice to the business and then potential volatility that you'll run into.
And so I think one of the one of the most difficult things here is that revenue leaders are under a lot of pressure to grow, much like founders and CEOs. And so even before you can build to that efficiency, you're under this pressure of like, you need butts in seats. We need to grow. So like throw bodies at it in the short term as we figure out the efficiency pieces of things. But what you find is actually adding those bodies makes it slower and more difficult to get efficient. And so these you have this tension. How were you able to, or was this a cultural thing at Square? How are you able to get the patience to do things right? And maybe not just like blast the sales number at all costs, but actually like build the right foundations.
Yeah, I think there's two parts to it. I think there's a benefit of Square being a product-driven growth company, like at its in its infancy, right? Because culturally, you start to think, how can my conversation with our marketing team and our sales and our product and operations team is how do we drive more to self onboard so we can free up capacity for salespeople. So that's a different conversation when you think of the identity of a company. What I will say though is the fundamentals are still around. How can we be efficient and lean with how we invest? But the way we build it, I don't think there's like a right answer, other than we try to obsess over all the different like KPIs of the program, and not just the like late stage pipeline forecast. That's a big part of what we do. But like the first question we're asking, every quarter is, how do we feel about our quota modeling, right? Because incentives will drive a lot of your productivity, right? And we can get creative with what that means from a compensation structure standpoint. But do we think there's more juice there? Like, can we get more out of the team? The second question we always ask is, what's our efficiency rate with our leads? And then what's our total like leads coming in? And what's our distribution there? Because a lot of times there, it's 5% here and there can make a huge difference. And then the third question, once we get through kind of those like really stress testing our efficiency metrics, and we do this ad nauseum, we do this in our weekly business review, it then goes to, okay, where do we need more headcount that we think we can just maintain or increase productivity by introducing this headcount? And this could be through diversifying channels, like adding field sales or enterprise reps, or continuing to grow telesales. Or where do we need specialization? So the other thing that we've done over 10 years I've been there, it's like, okay, we need headcount, but we don't need an AE because we don't know that we have the leads there. But if I can get one person to take onboarding off of, the life cycle of what an AE does today, we think we can get, 20% at scale. And it's asking those questions and forcing yourself to do that before you say, okay, now let's get a headcount. And even, I've written, documents to whether it's the board or senior VPs at the company, making sure we keep this discipline, because, when competitors, it's easy kind of like if you're doing a great job, ROI looks great, and, you're continuing to like hit your metrics, like you said, to have that mentality, right? It's very difficult to do that when you're under fire because, you missed annual plan by 20%. A competitor's coming and they're taking, a lot of your market share. And I think that there's always going to be a pendulum swing around. Sometimes you just got to throw a headcount and learn. And like for us, like new segments and things like that, we want to be experimental, but keeping that discipline so that you don't get ahead of yourself, because inevitably it'll lead to just layoffs, right? Or like having to do some type of riff. So that's how, yeah, I'm not sure if I answered your initial question, but that's how like we try to make sure we're doing the right pattern recognition and having the right conversations to get to an outcome of now let's explore headcount versus the flip side of we need headcount to solve the problem.
Okay, so I want to clarify. So the key sort of metrics and the questions you're asking. So first is quota modeling and coverage, then efficiency rates. So efficiency rates on a per lead basis, number of leads. Then you're asking the question about specialization. Those are the right questions there?
That's right. Yeah, you captured that well. And then you get to headcount. Now it's like if those are checked, we feel good. Then it's like, where can we add?
Okay. And so when you look at quota modeling, what are you doing to balance efficiency with total growth number? Because one of the things that, we talk about a lot is, it's really expensive not to have enough headcount. because if you don't have enough headcount and reps are overwhelmed with leads, then you see win rates slump, and you're paying significant dollars to generate that lead volume. But also, you don't want to have too much rep capacity, because then people are sitting around on their hands, which is inefficient. It's not fun for the reps. They get disengaged. Nobody likes to have like one demo a day. And so how do you approach quota modeling? What else are you looking at to figure out the right allocation of headcount by segment? Just like walk me through some of the strategy.
Yeah. And listen, this is something I think we are always trying to get better at. And it comes to
Yeah.
like the first piece there is, and I'm sure anybody watching this, I'm sure if you have like the perfect science to this and you got it nailed, like shoot me a DM. I'd love to learn. But we believe that if we're consistently measuring, then we'll get closer to the pin and more accurate with, the strategy. And it starts with capacity modeling, but capacity modeling, not just from like a total lead standpoint, but by channel. So what do we expect to come in from marketing? Marketing for us have been established, can be pretty consistent. We do some campaigns and we'll see, maybe some more higher value leads come through, but the overall number is pretty consistent that we can forecast against. And the second piece is, what do we expect for emerging channels, things like partnerships or resellers? And then the third piece is going to be, what's the catch-all then from there, between our sales development BDR program and an AE source. And AE source is, for us, like AEs putting their own sweat equity into finding a lead and can be the Band-Aid. We have a principled rule. We never want it to be over a specific amount of that lead distribution, but we start with that level of capacity modeling. And then we look at complexity within those leads, right? So where do we think that, for segmentation, we need a different type of account executive to close this lead, or that's a different sales process. So we're going to weight it accordingly. And I think like all of that goes into what essentially like I'm sure people watching this are like, all right, that sounds great. But most people's experience is your CFO says, hey, here's a number, figure out the math to hit it. Right. And, one option could just be like, hey, I'm going to triple the team and cut efficiency by 20-30%. And I think we can get there. And maybe your ROI is break even, but it's a short-term thing. But we're weighing that off too. We try to make sure the force function for us is always going to be making sure we maintain a team that is, 2 to 4x ROI back to the company. And that forces us to really think deeply about where we can increase productivity, or specialize to get a higher win rate. But it starts with capacity modeling, which isn't a perfect science, and then running that up through kind of what we've seen for historical win rates or expected win rates, along with kind of that roll-up to annual plan. Does that answer your question?
Yeah. Yeah, that's helpful. And I think the subtle thing there that people get wrong is you started with lead volume, because most people, like what I find a lot of revenue, especially first-time revenue leaders do, is they get a financial model, they get the plan, and the revenue line is a function of number of reps times quota equals revenue. And they go, okay, so every time I hire a rep, then I get closer to my number. But that's not the reverse salient. That's not the bottleneck in your production system, if we're going back to the goal or any of these analogies. The bottleneck 90% of the time is opportunity volume. It's do you have enough leads to generate enough pipeline volume to support the number of reps you have? And if your entire growth model starts with opportunity volume, and then the number of account executives you have is simply a function of the opportunities you're going to generate divided by the rep capacity, you end up with a dramatically different rep number than this top-down model. Just your mental model is completely inverted. The reps don't produce revenue.
100%. If I could add to that, I mean, the best unsolicited advice I could give anybody in, a VP or CRO role is you really have to understand your model. The sophistication and the inputs that go into it have to be more extensive than just rep time quota, right? Because you're going to see peaks and valleys in that. And you got to have, the best partnerships that I have, in my current company are with my finance partners, analytics, and operations, because we are constantly tinkering with that model before we come to an aligned consensus on what we can deliver. And then we look at kind of all the different, inputs from there that we think we have the ability to influence and increase.
Yeah. And I think this one of the other interesting things you said there is specialization, because it's an underrated part of team design. And we're actually going through this at Owner right now, because we were predominantly inbound, and then we swung all the way to being predominantly outbound, and then we've really like nailed it on growth marketing the last little while. Now we're like predominantly inbound again. And so the question is the segmentation is our rep segmentation correct if you're segmented by inbound versus outbound? Well, what if the channel mix is totally different? So is the right version of this team design by region and geography? Is it about channel, inbound, outbound, partner? Is it about the size of the customer, for us single location or multi, or could you have like multiple tiers there? But how do you think about, like, what analysis did you run to build the team design and figure out how you want to segment, how you want to specialize? Just walk through the sort of the decision making process for that.
Yeah, and that's a meaty one. And that there's, again, this is one of those things where it's like there's no right way to do it. Like, people will know their business best they can, and so, like, you make your best guess sometimes. But for us, like, the things we look at, that I try to prioritize, the first piece is CAC. Right? So what's the cost of acquisition? You have to have an honest conversation, because if you're just thinking about like what every rep will tell you, like your inbound leads go to your best people all the time, and that's what we want to feed them. And I think for a certain segment or a type of customer, that's the right thing to do. But there's potentially a long tail inbound segment that it's maybe low complexity, high velocity, and we want to be really mindful of the unit economics of acquiring that through a sales motion. This goes back to kind of the DNA being a product driven growth organization versus sales organization. In my opinion. So it starts with, we look at the CAC of the lead coming through. So the cost of acquisition of lead coming through the sales channel. Should it touch a salesperson? What level of salesperson? That's the first piece. The second thing we look at is, some type of like weight or score for complexity. So within our business, we look at multiple locations, or revenue is typically a good proxy to understand complexity, and we segment by that. And then in certain markets, we look at specialization around like domain expertise. So whether it's in an industry or vertical, so restaurant, retail, or services. But to get to that, like if you zoom out, like the question has to be, do we get like a net benefit at scale, not ones or twos, but at scale with specializing to this segment? Right? Carving off a mid-market or enterprise team, carving off a partnerships team. Do we get, a net benefit at scale that's meaningful, that's material, for, shifting our inbound and outbound, or specializing? And in some markets for us, that they're more mature and these things make sense. And in some markets they don't. So it really is a case by case kind of analysis with, there's a lot of pressure on the business, at least in the businesses I've worked with. So I'm assuming some of the listeners have this too. When you see competitors specialize, to run the specialization and, or to put, this, big name company operates their sales motion this way, and that this is the playbook, and put a lot of specialization around the team. And I think that is the biggest risk to efficiency and like maintaining your strong unit economics, is you run too fast to specialization or diversifying your sales team, because it's what everyone's doing. You have to always hold to, like, if I create an AE who's focused only on restaurants, do they get a significant lift in win rate, in total, closed accounts, and overall experience for the customer? That's another piece too that plays into this sometimes when you're earlier on, than what we're doing today with the more general model. And I think that's the same question you got at, whether it's segmentation, because there is a benefit earlier on to being more broad and general, because you start to see the patterns, and then you can kind of shift specialized from there.
Yeah. And every time you get more specialized, your sales engine gets more complex and sometimes brittle. And I've had this conversation a bunch with my teams and just friends, where, does it make sense to have a different BDR team for small versus big customers? Well, how many BDRs do you have? Because if you're segmenting a team of 4 people to big and small, and one of those BDRs doesn't work, or one of those BDRs gets promoted into an account executive position, well, 50% of your segment is now gone and needs to be backfilled. And there's just so much risk in that. There's so much risk in that system, and it just becomes very brittle. Like even pods,
Totally.
pods is another thing. Like, do you want to make a BDR plus AE plus launch pod? In theory, and I've done this in the past, Shopify, one of my teams was in this pod model, and it really worked. It really helped bridge that relationship, and it was quite strong. But every time something happened in any of those teams, that whole pod was just under so much pressure, and it was just so chaotic that net it was advantageous, I think, because this was a larger team. It was like 70-ish people across those three functions. But oftentimes people go too fast to that specialization, and then your system's so brittle.
Totally. And you create these like single points of failure, right? Especially like in the BDR pod model, because, you have one BDR is crushing it, or 2 out of 5, and then they get promoted, and it's like, it goes away, and it throws things up. I think the goal should be that, you're essentially, especially as you're scaling, growing the team, you're just trying to have like the minimal amount of risk as possible in your systems, right? And there's no zero risk in any of this, right? Whether you have a national router or pod, but minimal amount of risk that you can, overcome. And then, I think you're always asking the question around specialization, but it has to be because there's going to be a material impact on the productivity of the business by doing this, or by the customer experience is the other piece too.
Yeah. I presented at last year's GTM 2024, the Pavilion event, and my talk was on like building efficient sales teams, and I built a example model of what a team looks like, of what a team spreadsheet looks like. And I think one of the pieces that people miss, and it's related to this, single point of failure or fragility idea, is you have this model, and you have the number of BDRs times the production in all of these segments, and you have this like pretty consistent growth. But as soon as you start to factor in churn, okay, so now 20% of these roles, the ramp restarts every 3 months. And then in these roles, there's some like other thing that happened, and so the output is lower. You start to see it's helpful to see it in a spreadsheet where you've now got a system that on paper looks really good, but then as soon as you factor in people moving around and resetting because they have to start in a new segment, or they're building a book from scratch, the amount of change that you're introducing brings in an amount of risk that destroys the spreadsheet, basically, because you've got too many of these rows, or too many of these cells that are like back to zero and starting their ramp clock again. And so if you've got these like very brittle structures that you're talking about, it can be this like underappreciated risk.
Totally. And I think I saw part of that that presentation. It was phenomenal, by the way. So the plug, I know Go to Market 2025 is coming up soon. I think you'll be there again. But really good stuff. And I think the other piece is, revenue programs. It's end of the day, it's still a people business. So anytime you're introducing specialization, you want to be mindful of what is this creating for like the career progression and learning opportunity of the team, and is it, is there a benefit there for like what the company is focusing on long term, or is your specialization just experimental? And if it's not, that's great, but then that needs to be like an incubator program, something really small and to the side that you treat and you communicate. That's experimental. That's not like the next pillar of your revenue work yet.
Yeah. How much of a formal incubation program do you have? And how big is like the total sales org, to just give people a feel for this?
Yeah. For Square right now, globally, we're anywhere from 600 to 700 people. And that's we're in the US, Canada, Australia, UK, Ireland, Spain, and France. And we have a pod that we dedicated to incubation for quite some time now, that has now kind of shifted to more formal programs. But for the last 3 years, a pod of about 15 people globally, that their
15,
core.
okay.
Yeah, across like all the markets, that their
That's great.
core objective was like, okay, we think we can hit this sub vertical. Let's go see if there can be penetration there. We think that we need to target like field distribution, and so like, let's focus there. And essentially, it was a very successful program that put itself out of being a program because we spun up, the different programs around that. But I think it's so important, to create an experience with internal talent that can test things out before you specialize, unless it's like the no-brainer of all things, to
Hmm.
specialize around. Like, give yourself the room to learn, screw things up. It'll also help you with future modeling, so you're not pulling off of like existing programs, and validate the idea one way or the other. So,
Yeah. Those programs also need their own oxygen. It's really hard for them to exist off the side of somebody's desk. It's one manager that has a number to hit and then like two reps doing something weird and new. It really needs
yeah,
like a dedicated leader, resources, and just like space away from the core teams.
I completely agree.
I want to go back to this concept of like team segmentation. How do you organize a team for efficiency? Um, because one of the things that I think is helpful here is to explain what a leader should be looking at. Like when you're trying to decide on specialization or team structure, uh, what are the metrics that you would evaluate when making a decision whether or not it makes sense to carve something off and specialize?
Yeah, I think the first thing, because we've gone through this, at Square in multiple ways, is we look for pattern recognition and what are we organically winning. It's like, what are our customers telling us right
Mm.
now? And what we saw for an extended period of time is overwhelming majority of all the businesses that this generalist sales team was winning, were restaurants and businesses in food and beverage. And so that starts with like the hypothesis, like something's here, right? Do we need
Hmm.
to especially more and go deeper? And then I think then it's a little bit more meta, where you're looking at, okay, what is the buying experience for a customer in that segment, and is it differentiated? So you start
Mm.
with the customer. This is what is it, the principles book, where it's like the jobs to be done. Like, what is a restaurant buying experience versus a retail business versus a professional services business? And do they need a consultant in that journey that is a little bit more of an industry expert? And I think, as we go, like, so you start with, okay, there's organic interest. Two, there's a massive TAM, right? That's the second piece I didn't mention specifically. And then three, how would our training be different, or what would the experience be that's different for both the rep and the customer? And then the fourth one is kind of what I said. Do we believe that that's worth the opportunity? Like, can we
Hmm.
take this number from 10 to 20, if, and all maintaining everything else at scale, if we can have that specialization? And I think those are the things we're looking at. I think and I'll tell you, we get it wrong too. I mean, we took that like cut a model for restaurants, and it was like made so much sense. And then we tried to, probably prematurely do that for some other verticals, and a year in it didn't
Mm.
make sense. So we pulled that back. And to your point earlier, that's why it can be so disruptive unless you're
Yeah.
fully committed to this, whether it's vertical specialization, et cetera. And that's what we're looking at. And no different, when we look at, our enterprise segment, very similar, where it's kind of the same frame. Like, what are we seeing organically? What do we think? We're doing cut rates by revenue range. Like, where do we see win rate start to drop off? Is that a complexity thing? Is that a skill thing? What does our training
Hmm.
look like? Your training will really lead you to the answer there as well. And it's also, if you're somebody who's on an enablement or training program, really difficult to train a rep on something that's a mile long and an inch deep, even with
Yeah.
the support of these AI tools. And that's what we're looking at. Then, I mean, for us though, the kicker is, if when we specialize, is you got to put your money where your mouth is, which means like, okay, we're taking the same
Mm.
10 headcount, and instead of focusing on X, they're going to narrow down to Y. And we believe focus will drive 5% more productivity. You don't have to do that right away,
Hmm.
right? Because there might be a transitionary period, but call it over a year's time. That's what we're going to get to. And that to me is the only reason to ever specialize.
Yeah. Yeah. And I think one of the helpful exercises to do is take your win rates, deal velocity, ASP, and just look at it by as many different slices and dices as possible. Take those three things and then look at it by channel: inbound, outbound, partner, self-source, because you might specialize your team by opportunity channel. Or you could do the same thing, but then by market: hospitality, retail, pro serve. Then you could do it by size. You band your customers, and you look at, and you start to, I think, like, generating those hypotheses. You generate as many of those hypotheses as you can, and then just let the data dictate the adventure from there, because you're going to start to see things jump out, and then you can hypothesize, okay, so there's clearly different win rates across these segments. So if I take, like, let's say inbound versus outbound, if I'm going to take my best reps and put them into outbound because those are harder to close but maybe bigger, but your inbound interest is the highest interest, so you have to then do the math. Okay, I'm taking this group of people and putting them on inbound, so I'm going to see lower win rates because it's my more junior people on this body of revenue, but then higher win rates on this higher ASP outbound. And then you got to, like, net out, am I meaningfully ahead? Because the 5% may justify it. You probably want more if you're going to do the work of, like, a pretty big reorg. But I think that's a good heuristic for people to follow, is, like, take your 3 or 4 core metrics. You should really also take that through to retention, so you can understand LTV. But, like, what are your 3 or 4 core metrics? And then you just start looking at, like, guess after guess in terms of all the ways you could segment, and just see what the data says.
Yeah, and I completely agree. And the only thing I would add there, Kyle, is there's a way to step change into it by, looking at spiffs and incentives, where, like, it can kind of, if you see there's an opportunity in a certain area before you go through the whole reorg, it's like, hey, can we naturally move this behavior with, shifting our incentive structure because we believe this segment is higher priority to win right now. And so there's things you can do there, but I think your kind of framework and the scorecard you're outlining is spot on.
Yeah, I had Ryan Milligan, who's the VP of Sales and RevOps from Quota Path, on, and all they do is compensation stuff. And he used to run RevOps and be their SME, so he knows a ton about comp plans. And one of the best insights I got from that, he's like, don't change your comp plan until you've run, like, an aggressive spiff on something. Like, if you want everybody to do multi-year deals, is before changing your comp plan to really structurally chase multi-year deals, just run a big spiff and pay more than probably the comp plan will. But, like, you can do some of these tests without making a full scale change. Oh, can I just take my lead volume and point all of these types of customers at one person without fundamentally changing the rotators of the team structure? Can I just, like, update in an ad hoc manner, like, rotator stuff? There's ways to get signal, which you talked about earlier.
Absolutely. Yeah, that's great. Go ahead.
So I want to change topics. I knew we were going to get super lost on this topic.
No, that's great. No, I love it.
What do you think are the other biggest drivers of inefficiency? So, like, too many reps, not enough leads is definitely one that we've hit on. What else? What are the like, hidden inefficiency drivers that you typically see in a revenue org?
Oh man, consistent. What I would say, like, consistent manager playbooks. Managers get ignored all the time because they're good, right? And a lot of leaders and people who have, are great at being revs, understand the business, get into leadership. They can cover up gaps in systems and process that the company or program has. And what we find is, if you have a program where every manager is doing something different, doesn't mean they can't bring their own, like, flavor to it or personality, but they're doing something different in how they evaluate pipeline, how they talk about forecasting, how they measure what's their core deliverable. Are they just managing a spreadsheet that rolls up to, VPs, or are they actually in it and owning the pipeline with their reps and co-selling and doing these things? That is just a massive, and we've seen huge swings on changing the folks here in the day-to-day of frontline managers. And so that's one thing that's, like, a big thing to look at. I think the second piece is going to be, we talked about it a little bit, the sophistication on how you weight leads and think about leads. Like, every inbound lead lead
Hmm.
isn't the same, right? Every outbound lead isn't the same. Partnership lead. So there's like these higher level, distribution channels you can think about, but then to your point earlier, like how do you think about the size, the segment, the industry, et cetera? So there's a lot there with efficiency, whether it's do we route more to new hires or less, right? Do we make their job harder or easier when they're coming in? Do you segment out outbound, inbound? And then I think the third piece is how often do you scrutinize and talk about like the business and your KPIs? And we try
Mm.
to live by this idea that when we're talking about metrics, it's not meant to be performative. It's not meant to be a thing where you sell yourself or your team. It's meant to be a
Mm-hmm.
thing where it's like you're giving the hardest like critique and retro about where you see gaps so we can support around it. And creating that psychological safety isn't always easy because people come from different programs, sometimes different personalities, but psychological safety to in our weekly business reviews, hey, like how do we fix this or how do we make this to this metric and what do you need from the team? And having that collaborative approach across our finance, operations, enablement, and our sales leadership to really empower them to make moves and changes. So those would be the three things: the frontline management piece of it, where they're focusing their energy, the weighting of the leads, and then how you think about like those core KPIs and how often you're talking about them in a manner that's productive, not performative.
Mm-hmm. And so is that a monthly or a quarterly cadence for you where you're really getting into the nuances of the KPIs, the win rates, the like
Yeah,
details?
we weekly. So this is from my Amazon days. We do a weekly business review. My team may hate me for this, so maybe they'll chime in and be like, "Don't listen to anything this guy's saying." But we do a weekly business review. It's a 45-minute pulse check. Everyone's kind of knows, we have finance and some of our program leads put in some anecdotes to help complement the data. The finance team interprets the data, and we're just doing pulse checks every week. Around where we're at. And when we have special topics and deep dives that come up because we don't have a good answer live, we'll schedule that in the monthly
Mm.
cadence. That's with the bigger group. But yeah, we're at least doing that pulse check weekly. And the idea is that those conversations at the executive level, not that we're putting so much rigor where every single layer of leadership has it, but that we're sharing and being transparent around like the things we want to go solve for the broader team. So for example, if the BDR total win count is dropping in one of our international markets, like we're going to broadcast that and show that, hey, we're tracking this and we're seeing a
Mm-hmm.
trend line week over week. Maybe we're not overreacting to it, but we're monitoring it. And when it gets to the point that we're going to take action, like we're communicating that with the team, we're bringing people on the front line to give us some more context. And then if there has to be changes, we'll make those changes like on the go. Like we don't ever want our strategy to be so airtight that it's, or not airtight, but so like cemented that like we don't have the
Mm-hmm.
ability to adjust that. I think that's where we put a lot of work into building things out an annual plan, but every week we're scrutinizing it to make sure that we are
Yeah.
doing the things we need to get to the overall goal.
Yeah. I said this to a leader of mine a couple weeks ago after our June MBR. We've ripped off best months ever in sales, like, I don't know, basically back to back for years now.
Awesome.
And yeah, humble brag there.
Yeah,
But
I love it. Yeah,
you would,
keep going.
I
That's
was,
great.
I was joking. I was joking because you would never guess it. Like in the MBR, you would think that the business is not going that great because, we're pulling, and we have the advantage of an awesome data and biz ops team, but we're pulling all of the weak parts of the business and just like
Yeah.
hammering on them. Okay, like why all these metrics are going up and to the right, and we touch on them for 6 of 90 minutes, and then you're just focused on, okay, these ones are not where we want it to be. This is stagnant. Okay, what's our focus area for the next month? And we just like hammer it and hammer it. And I think you raise a good point. The nobody bats an eye at it because it's a part of our culture, and it's just pragmatic and objective. We're not criticizing a person necessarily. You're just looking at the metric and trying to do the 5 whys, get to the root cause. But I think that's a very underrated and important cultural touchstone for folks, being able to just like objectively look at the number and not hide, because we're salespeople. Like we want to spin it. We want to give it some polish and shine. But
Totally. And we're good at it too, right? Like ideally. So that's what you
exactly.
got to make sure you create that culture.
Yeah. Is that something you brought from Amazon? Because I know they're sort of famous for it, or was that already a part of the Stripe culture or Square culture?
No. Yeah, absolutely. So I think that's where it was like, I talk about my time at Amazon a little over 2 years, was like a paid MBA. So I brought a lot of that into the sales programs that I oversaw over the last decade. But Square overall, like, has had a culture like that, where it's really data-driven decision making, analyzing the business, sometimes too much, to be fair. So we got to make sure we continue
Yeah.
to do the work. But yeah, that was something I took from my time at Amazon.
Are you ready to level up your go-to-market strategy for 2026? Then don't miss GTM 2025, the only B2B tech conference exclusively for go-to-market executives. Join 1,000 other revenue leaders this September 23rd to 25th in Washington, D.C. for an exclusive executive-only experience. This 3-day event is hyper-focused on connection, strategy, and execution. Expect hands-on workshops, in-depth strategy sessions, and curated opportunities to build relationships with VPs, CXOs, and founders facing the same challenges you are. You'll stress test your GTM approach, align your team, and leave with real, actionable insights from top-performing leaders. Don't miss the must-attend conference designed to help you boost go-to-market results in 2026. Visit attendgtm.com, that is ATTENDGTM.com, to secure your spot today. And don't forget to use the code TOPLINE for 10% off your GA ticket.
So right now, how is the team structured? Like, is it verticalized by retail, restaurant, other? Is it inbound, outbound? Just like, what does the design look like today?
Yeah. So in the US, which is the most mature market, we're essentially specialized by restaurant and other, right? We initially did restaurant
Okay.
retail services, and we throttled that back. In our inside sales segment, which is our inbound segment, about, I'll give some ranges, like 60 to 80% of the accounts they work are inbound, anywhere 40, 20% are outbound. That's our inside sales segment. Our outside sales segment works exclusively BDR accounts, and BDR a little bit more up market in that like 1 to 10 million space. And then we've started to diversify distribution, acquisition channels. So we have a field sales program in the US that is quite large. We're hiring right now. And in our enterprise segment, which is very small and very narrow focus on some of our largest sellers. And that's that framework is pretty similar in other markets without this vertical specialization. So the inside,
Right.
outside, field, enterprise. And then within that, then we have in each market, everything rolls up to each like market lead, but then we have global overlay programs. Like our sales development team today is global, because the belief is that the things that we're doing there are very operational, and we want to make sure there's like one central place that we're getting all that support. And the BDR team works as like a national router today, which is when you were bringing up pods, like so many people, and we've gone back and forth and had great conversations about like pods versus national router. And what we find, because of the volume of accounts that we're working on, like throughout any given time, that the national will give us that flexibility for coverage. Right now we've gone away from that specialization, but over time that could evolve as the business challenges evolve.
Yeah. It's hard to overly specialize BDR because people just move so quickly. Like you're promoting through levels so fast, and there's a higher level attrition than most roles. So that makes a ton of sense. What's the difference between outside and field? Oh, sorry. Finish answer.
Oh, no, I was going to add, quota setting can get really challenging in those situations too. That's like another piece, because you have your capacity modeling for what you need for leads versus effectiveness. So that's another thing that we found really challenging. Field and outside sales. Outside sales is essentially an outbound program that call it less than 20% of their time will be in the field in their like given market. Field sales is assigned, a group of zip codes in a specific territory and is in field 100% of the time.
Okay, that makes a lot of sense. So over the last couple of years, what have been some of the biggest changes you've made to sales efficiency? So over the last, like, you can call it 5 years, can you think of sort of the milestone events where you had a step change in efficiency?
Yeah, I think two of the biggest ones is the verticalization in the US. Another big one for us around efficiency, and we kind of glossed over this, but incentive structure. We shifted our entire incentive
Mm.
structure to focus on our core metric for the program around new profit and revenue coming into the company. Before I got into the role, uh, reps could receive credit both for like light farming, so like growing an account, but then the first year if it was established on the platform and new business. And the reality is, the specialization there to focus on the net new account was really beneficial for us and drove efficiency in some markets 2-3x like output for that core metric.
Wow.
That's the second piece. And then the third one is around inbound and outbound. I think one of the biggest lessons I've learned is it's just really hard to have a program, whether it's telesales, field, et cetera. Maybe field you can get away with a little bit more. So I'll stick with telesales. That is part inbound, part outbound, but you're not really dialed in on like what percentage inbound versus outbound and expectation. Because what will happen mentally is there's no incentive to go outbound, right? Unless you do some type of spiff. It was I'm waiting for the next big account. And if and then you see, your teammates around you, oh, I got a big account and I got some numbers. So there's like challenges with equity, there's challenges with the profile that you're hiring and the culture. So, moving from because you're never going to get 100% dialed with inbound versus it was 100% inbound, 100% outbound. So we moved it to where, we anchor on this like 80% inbound program, 80% outbound program with the idea that kind of have this like less than 20%. Don't drop it to less than 5%. So it's like 80 to 95% specialization. And the learnings you get just from people obsessed with your BDR leads or obsessed with like the sourcing marks that we give them are really beneficial. So that's one piece that probably doesn't get as much of the fanfare, but was probably the most meaningful for us was the inbound versus outbound specialization.
Very interesting. Something you said earlier, which I think is which I don't see companies bake in, which is surprising, is you should be outbounding up market. Like outbounding to the same AOV customer as like comes in naturally inbound is sort of a waste of that motion. You only want to outbound into into customers you can actually win, so you don't want to go way up market. But one of the things that we did that made a big impact is setting floors for what we wanted to outbound into. And we've increased that outbound floor over time by adjusting our lead rotator, because we talk a lot internally about orienting our team to the highest expected value actions. So how do you instrument the team so that a rep, a BDR, and an AE are always doing the action that has the highest expected return? And so, if you go after a larger customer, you will have a lower book rate, a lower win rate, but a higher ASP. And you just do the math and you can start to figure out, it's like a pricing model. Price times quantity. Yeah. As price goes up, quantity goes down. But at some point, there's the top of that graph, which is your optimal price point. And it's the same thing with an outbound program, but people aren't very thoughtful about it. People just let their BDRs pick who to call, which we try really hard to limit, although some of it is okay. And the BDRs, when the BDRs are smart, but like, what is the top of that hill before your win rates diminish so much that you're actually producing less revenue per rep, but you're maximizing like the biggest customer with a still a good win rate, and like that's your like optimal point. And we're doing a lot to figure out what that is, which I don't find that people pay much attention to.
Yeah, at Square we call that kind of our sweet spot of targeting, where it's like if marketing can only give us one type of lead in every account that we chatted with, what would it look like? And it's typically, this revenue range and this type of vertical. And you have a lot more control over how you distribute, targeted accounts, assigned account lists to AEs, and then targeting for BDRs for outreach. And I think that you have to be confident in that sweet spot, have some alignment with product there. But to your point, at some point, you want to make sure your channels aren't overly competing with each other too, right? It's like, okay, marketing is delivering X and they're really good at that. And we know that that works because it's a lower, cost as an entry point. Do we want to put a BDR and an AE there? No, there's got to be a step up in AAV or something that is differentiating so we can scale this out. Where if our BDR is focused all down market, at some point you're going to have a scale issue and the unit economics just won't math, right? As you're growing the team.
Yeah. Yeah. Maybe just explain for maybe the younger leaders, when you say unit economics, what do you mean?
Yeah, I mean, for us, basically it boiled down to like the ROI, the return on investment of the program. So for every, rep that we have, like what does that mean for like the money coming back to the company overall from a program standpoint? What does it mean for every lead coming through? So basically everything that you're paying for within the program, are you covering your costs and then giving X amount more back? And then when we talk about unit economics, it's just doing that on a line by line level. So what does that mean for partnership distribution, inbound distribution, outbound BDR program, enablement ops, et cetera?
And do you take that all the way through to LTV CAC? So you're baking in the retention rates of the channel?
Exactly. Over a 3-year time frame. That's what we look at.
3-year. Okay. Yeah, cool. Yeah, that's another thing that I think a lot of people don't do. They're like, oh, well, we spent these dollars and we closed this many dollars. Great. Well, if the retention profile is materially different in this segment versus that, or this channel versus that one, then you're signing up for a problem in a couple of years.
That's the enterprise trap, right? Like you get a lot of big logos, big brands, big dollar signs, and then they leave you, before that 3-year maturation process, and or they never truly establish, and it's rough. And it's, in fairness, it's a trap in every segment, but I know in enterprise it's a big one.
Yeah. Or the cost to serve is way too high. Once you start
That's
layering in cost to acquire, cost to onboard, cost to serve, your big deals that could look great. Well, you need a dedicated account manager or dedicated CSM and a dedicated technical account manager, and it's 25% of a solutions engineer's time, and it can creep up. What we try to do is just fully load everything. It's like going back to brutal honesty, like fully load every cost. The leaders, my cost, the hardware, like put every cost into this thing and really see what it nets out. Because it's easy to tell yourself those like comfortable lies where you're like, oh, this program's great,
but again, yeah, it's taking 30 people to this account and we're losing margin every time we renew them. We're getting less margin. And I think that's the best thing you can do is fully burn your program and really understand what's going into your model as a revenue leader to really sound things there.
Yeah. Okay, I want to switch gears a little bit. So I have this opinion, and I would love your reaction to it. So I've argued that in order to build a highly efficient team, you largely need to build from the bottoms up. Like you need to be able to attract entry level, basically straight out of school talent, groom them through your entire program, and that as the core talent. The core talent mechanism to your team will lead to a bunch of other great effects, but especially in terms of efficiency, because the alternative is you're trying to incentivize senior reps to move over laterally. Like Square has always had an incredible cachet and brand, and so you can do it, but still expensive if you want to go try to recruit like real President's Club performers. So maybe just react to that hypothesis first, and then I got some follow-ups.
Yeah. Listen, I will tell you, I'm definitely in that camp. And there's a caveat where, in specific segments or things you're building, like for us, our field sales program, being,
not 100%,
there's things there. But I think overall, what you want to do is build a program that, one, if you remove the map buy, of course, mathematically makes sense because of, once somebody's with the program for 2-3 years, they understand, and then they're producing higher than somebody who comes external. But just from a people experience, like one thing I'm most proud of at Square has been there 10 years, was hired to do one thing. And it was as a senior manager 10 years ago. And I've been asked to do all these other things that have evolved into this role. My kind of executive or group that reports to me, 50% of them have been with me 8 of those 10 years. The rest are anywhere from 4 to 6 years. And then I have one person out in Japan who's been with us a year. And so like you get the benefit of having this connection to the long-term mission and vision of the company, and ideally riding waves together and going through really hard times together, but in your battle
Hmm.
tested. So I think from a structural standpoint and from as like a North Star goal, absolutely, especially when you have the right entry level points, right? Whether it's sales development or an inbound role, and then you can kind of build it up. What I find, the only thing I would add, Kyle, is like what I find in times in my career where we were potentially over indexing towards experience, it was mainly driven by our own uncertainty around what exactly were we looking for and targeting. So that made
Mm.
us feel better if they came from company X. And then two, really a lack of what I would say impressiveness, like with our training and development program. So then like you're paying for the experience because we don't, so if you find yourself doing that consistently, like really look at your training and development. Do you feel like it's world class? If it is, hire for behavioral skills, get people that can embrace your culture and build them up. And I just think that's a much more enjoyable experience, and it's a much more profitable and efficient experience overall to some of the things we talked about earlier.
Yeah. It's also really tough to get the A plus plus talent once they're 4 or 5 years into their career,
That's right.
unless you're going to pay
Yeah.
through the nose or give them a big promotion. It's really challenging because companies never want those A plus players to go, and they're always within 6 months of the next promotion, and your value to a company is always greater where you currently are because you have all the context, you understand the business, you're connected into the rest of the organization. So being able to grow from the ground up, like we starting this year made a big shift to hiring mostly new grads into SDR. So it's all
Awesome.
business school grads from the top schools around Ontario. We're 100% 5 days a week in office now with these folks, and the results have been bonkers. Like the speed to ramp and just like the numbers that they're putting up now. So it's been very validating, very validating to see. And like these kids would have gone somewhere else and crushed it there probably, and you would have never had a chance to get them to take a lateral BDR move when they thought they were going to get an account executive job. So I think there's a bunch of outcomes. One of the things that you've said is like sales talent exists everywhere, and so
Yeah.
instead of the professional experience, it's all about the ability to do hard things. I think was your quote.
Yeah.
And so talk to me about what you're looking for in hires and like what's that DNA.
Yeah, well, I think, salespeople can be found anywhere. Like this comes from my experience building out our St. Louis site for Square. And a lot of these people, the first hiring class of 6, almost 9 years ago, 5 of them are still with the company. 4 of them are senior VPs at the company. And
Wow.
this was a time, so it's like, oh, awesome. It's the most humbling experience ever to be a part of that. And these are just exceptional individuals: Alexander Hammack, Chris Hayes, Hannah McClintock, to name a few here. Haley Bartholomew, another one. I'm not sure I don't miss anybody. But within that, this was a time, right, within, kind of tech space that, okay, if you were Square and you were growing, you had to hire somebody from, like, they have to get tech, right? So you had to come
Yeah.
from a Salesforce, you had to come from and I'm sure Shopify probably similar, right? Like you want to get people with these like flashy logos. And I just found that one, we were consistently in a loop where that, like, we weren't getting what we expected out of maybe some of the people we hired. Not to say there wasn't exceptional people from these companies, but two, again, I have this belief that if we just hired based off of, being coachable, being competitive, being motivated, and hardworking, like if you could just try to identify those 4 things, and within that comes out like, hey, have you done hard things? Like what adversity have you dealt with, whether it's in college or within a certain job, and we build around those people, and we know that like there's going to be 6 to 9 months of like debt because we got to teach them how to do these things.
Mm-hmm.
But we build around them that long term it would be something that would pay huge dividends. And fortunate to have the luxury of time on my hand here, having experienced it, and it did. These people were exceptional.
Yeah. Coachable, competitive, hardworking. Then I missed one.
And motivated.
Motivated. Okay. How how do you assess motivation? Like it's so tough. Like, oh, are you driven? Yeah, I'm so
Yeah,
excited. I'm
right.
so driven. I want to conquer the world. What do you do to actually, maybe just let's answer them one by one, but how do you actually figure out if somebody's legitimately motivated? And then we'll get to hardworking and the rest.
Yeah. So I know there's like a better, academic answer around making sure you have the right star question and probing. But for me, I'll tell you, like what I did with that first group in St. Louis, when we got to the end before we did an offer, I would call them like, hey, you got 5 minutes chat. I want to like walk through this offer and call you, set the tone. And what I would say to them is I would kind of like flip maybe what they felt was the experience through the interview. And I'd say, listen, this role might be 100% outbound. It's going to be really friggin' hard. Like we're going to have to work your butts off. And it wasn't like I need you to be here 70 hours a day, but I wanted to see how they would react to that, right? What and motivation can mean a lot of things, but what is your motivation to do this job, right? And I'll tell you, of the 6 people we hired, there were 4 more that we didn't hire because their answer to that was, well, I got to reconsider. This other company has more inbound leads, and I don't know. And they ended up
Yeah.
pulling out. So I think there's ways that you can kind of play this dance of like engagement and commitment to what they're coming into. It gets harder as you build a brand, candidly. Like a Square became a more well known. People will say the right things, right? But sometimes they just want to get in there.
Mm-hmm.
I think the other thing, like when you're looking at motivation, it's really understanding like, hey, give me an example of a time that you experienced something really difficult and you had to pull yourself out of this situation, and try to get to some more of those personal examples and not just kind of those canned responses. But it's something that if I can nail all 4 of them in an interview process, we'd be 100% retention, right? And everything would be thriving. And I think it's something that you kind of commit to doing your best, the work, in the interview and the evaluation. And then as we're coaching and developing, is what I can guarantee is once you get into the program, the people who will be promoted will have those characteristics and embrace that. And that's where you have a lot more
Mm-hmm.
control because you just have more time with people.
Yeah, it's the exact same approach I use. I'm the last interview for all of our go to market frontlines, and I same talk track. It's uh, brutal honesty and like, look, owner, especially now, there's a lot of buzz. It looks so exciting. The reviews are really good. I was like, but let me tell you what's like not really for everybody. Super intense. We're a performance management culture. Like if you can't hack it, you're unfortunately going to be managed pretty diligently. And we're not really like a work-life balance place. If that is what's most important to you at this point in your career, like this might not be that fun, especially because everybody wants to get promoted, and owner gets the benefit of hiring all of these incredible people. So unless you're strapped in, working super hard and extremely driven, like you're probably not going to get promoted, and it's going to be really frustrating. And I say that to let the wrong people opt out, and we definitely see it. And also you can just like see it on somebody's face. The right
Yeah.
people give you that like hell yes, that glimmer, that sparkle. They're like, yeah, put me in that environment. I want to be pushed. This is what I'm looking for. And other people, you can see them just be like, oh, like, but I love work-life balance. Like I like to close my laptop at 5 and I don't want to think about it. Okay, well then this is not going to be super fun for you.
Yeah.
And I think it's the only path, because everybody knows that every hiring manager wants to hear how hardworking they are and how motivated they are. It's you got to
But
just like be honest.
you owe the transparency to them, right? And I think so people know
Mm,
what they're getting into in those situations. And yeah, man, I think there's a way where you can, work to that level and have your balance more of like a harmony thing, but you just gotta know like this isn't, we're not here for vacation packages, right? Like we're doing something really meaningful. So
yeah, yeah. Um, how much have you been able to bring data science into hiring? Like, have you gotten down to like the specific ways you're identifying traits and measuring, interview scorecards versus in role performance? Is that something you guys have gotten to do?
we do a quarterly retro of kind of looking at a scorecard of like what are the common themes of where we brought people in from, what were the scores in the tool, and then where are we seeing the performance. The challenge there is like typically for us, it'll like you don't have anything really meaningful. And so you're looking at cohorts in their months like 15 to 18 or 12 to 15 as they ramp
Yeah.
up. But that said, a lot more I think we can do. And I know there's a lot of really cool tools out there that as we get through our annual planning process, we'll probably look at, since we're going to be hiring quite a bit and gearing up for
Yeah.
second half in 26.
Cool. Yeah, we're like probably going to build something ourselves for it, because all these ATSs, all the applicant tracking systems are so bad. Like you can't get any data out of it. It's so frustrating. I
The
built
black box.
Oh, I know. One of the vibe coded apps that I got to like 80% and then like broke 100 times was uh, an app that could call to the Lever API to pull out all of the candidate records, to pull out all the interview notes and then structure it in a way and try to make some of that more unstructured data structured. I got it to the point where it could actually call into the API and it worked, but then like it kept failing as it pushed it to the LLM for analysis. But I'm like dead set on this. So if anybody's listening that's done data science work in hiring, I would like to talk to you.
I mean, there's so much, right? Very like rich data available there that seems like it gets underutilized when making these decisions, at least at scale, or understanding the patterns, like how you evolve your profile and whatnot. But yeah, let me know.
Yeah.
I'll join that bandwagon, go. Let me know what you find there.
Yeah. Like even this question of how do you figure out if people are motivated? Well, you could give interview, if you scored every single rep you've hired in the last 24 months on the level of motivation, and then feed in all of their interview transcripts and interview notes and just ask the LLM to say, hey, what are the common themes in the interviews where the motivation is like 8 or above? Like, what should I be looking for? I'm sure it could pull some insight. This is my next frontier. I started down this path at Shopify, and then we got reorged, and then I ended up leaving, so I didn't see it through. But I think there's a lot here. I want to get more scientific about hiring.
I love it, especially because it's when you're removing experience as like one of the things you're like looking to have a proxy for, skill. Like you do have to be a lot more scientific potentially, so it's not all on vibes, right? So
yeah, we do the same retro. Like we did our first retro like 2 months ago, where we looked at every single new hire from the last 2 years, looked at what people scored them, what they've produced in seat. And you're like, okay, so this was I think it's like out of 16, because it was all scores of 4. There's 4 scores of 4. Okay, this was a 13. This person scored a 13 and he's one of our top producers. What, like, why were we so wrong? Or vice versa, this person was a 15 out of 16 but is only mediocre. And then we went and I opened up every single interview scorecard, and it was all the managers from that function, BDR, AE. And so we went like line by line. It's like, what could you have known different? Like, what should we have asked the question? And that was actually a really helpful process.
Yeah.
I'd like to do it at scale though now.
That's the kicker.
Is that what your retro looks like, sort of?
Very similar, very similar. And then it's kind of like, hey, here's the overall, what we see for these cohorts. Here's the individual performance and scores. And then it's like, we kind of anchor towards like, what about our process? Like, why don't we catch it either? Do we need to shift our questions or our focus areas? Is this salvageable or is it not? We didn't go to the level of like looking at, I think for a handful of people we did, we said like, well, how did this person unfortunately look at the negative side, how did this person get in here? We probably should have evaluated like, oh, how do we hire more of these people? But we did look at that for one individual. So very similar kind of overall.
Yeah. One of the funny outcomes was one of the highest scored people out of everybody in this particular function that we scored was one of the fastest exits that we've done. What happened? Like, what the heck happened? And then we went line by line. We're like, oh, well, they were just lying. Like all of this is a lie now, and there wasn't much learning from it, unfortunately. But like a good reminder of how difficult hiring is.
That's where you say, good on you, and that's it. You got me. So that'll
Yeah,
happen
exactly.
all the time.
Yeah. Okay, I want to move to our quick fire because we're running short on time. So, in your mind, what separates a great revenue leader from just like a good one?
Oh, two things, and I think they both have to be present. One is operational. Like you have to be an operator to be in this day and age. Like this isn't let's go pound the pavement and hit every door and be charismatic. You got to be an operator. So it's science over math. And then the second piece is you have to be able to motivate and inspire people. It's still a people business. And I think sometimes you see shifts one way or the other. I know from my own experience, sometimes I shift one way or the other. And I think you need both. You got to be a strong operator and you got to be able to inspire and motivate and be able to, be empathetic towards the human experience of it's hard. You have to be irrationally optimistic to be in sales. Like it's a very challenging thing. So you have to be able to kind of keep that pulse and motivate.
Yeah, for sure. What's the most common advice you give people taking their first like big leadership role? So their first, second, or third line leadership, maybe their first CRO job at a startup. What's the most common advice you give there?
Yeah, I think probably the first piece would be get curious. I think a lot of times, and again, these are like, I'm not preaching because these are things I've experienced myself. There's the pressure to fix, the pressure to deploy the playbook, the pressure to be the person that people rely on, right? And in reality, like your number one job is to do deep, thorough discovery and evaluation, just like a sales call, right? It's so fundamental. But yeah, I get curious, ask questions. 9 times out of 10, the people within that business will lead you to the right answer if you ask the right questions, and then you'll know how to solution. So it's like withhold all the urge to be superhero CRO or superhero manager and just get curious and shut up. That would be my advice.
I love that one. That's a great one. What's the hardest lesson you've had to learn?
It's a good one. Hardest lesson, I think, is the power and dependency of like having to do things in a cross-functional manner, right? And and I'm so privileged to have gone through these experiences, but like nothing gets done without, call it like the 5 or 6 different stakeholders that either directly are involved with your program or indirectly sometimes to move things forward. And then, I had a mentor of mine, Eric Sager, say this one time where he said, revenue leadership in a company, especially a product-driven company, it's a lot like enterprise sales, right? When you're doing enterprise sales, you don't just go to the CEO, shake hands, close the deal. You know the CEO, you know the technical side, you know the end user, you know the finance person, and getting things done in a company, especially as it scales, it's a lot like that. And it comes from being authentic and general curiosity. So like the hardest thing is really embracing that and being patient enough to learn the incentives and goals of other programs and to put the work in there as I've kind of like evolved my leadership career. And there were some hard lessons where it was product versus sales in situations, or sales versus marketing, and there's a quote where it's like faster alone, further together. Couldn't be any truer. So really, if you want to do something remarkable in a revenue program, it's got to be all hands on deck, psychological safety, and putting in the work to go together. Hope that answered. That's probably the hardest thing I've had to work through.
Yeah. I think that's very endemic in revenue leadership. That was one of the mistakes I made early in my career, is just I was so used to trying to be a competitor and winning and like driving to a sales number that you take that same mentality in working with stakeholders, and you just create friction because of your that sales DNA. What's the best thing you've read in the last 12 months?
thing I read in the last 12 months. Well, once a year, I read the book, The Alchemist. So that's like a
Mm.
big one. Did that. And then, because I've been on paternity leave, I've read a lot of children's books as well. There's a
Yeah.
My Dog Carl, I think it is. That's a good one with my daughter. But yeah, The Alchemist, probably the most recent one that, and I always got to give this disclaimer. I listen to books. My wife's a big reader. So whenever I tell people I read, she's like, don't lie. Tell them you listen to books. So I listened to
Yeah.
The Alchemist not too long ago, which is a great one. So if you haven't read it, haven't listened to it, check it out.
Yeah. I'm almost 100% audiobooks now.
Yeah,
There's
okay,
no
good.
other time. There's no other
It's
time.
efficient.
It's like when I run or lift or I do chores, like I don't have sit down book time anymore.
No, we
I
talked
got,
for 40 minutes about efficiency. How could we not be audio listeners with books? It's the most efficient thing to do. You can do it while you're multitasking, right? So
yeah,
there you go.
exactly. One more question, and I might cut this out if I can't get through it. So we both lost our dads recently within weeks of each other. What's the best lesson that you learned from your dad?
Man, thanks for asking that. I think for me, the best lesson I learned from my dad is, 80% of it is showing up and doing your best. This was a guy that for 56 years ran a bar from the time he was 22 to 58. Took care of a lot of his family members, financially, working since he was 12 years old, and never complained. Up every day at 5:30 a.m. Never made an excuse. I don't think he ever had a sick day, which is kind of crazy.
Yeah,
But yeah, just like the idea of like if you work hard enough, you can figure it out, and you got to show up. You got to put the work in.
I love that. Yeah, the thing from my dad that I've like really come back to, because it was something that like frustrated me a lot through our lives, is like take the scenic route. My dad was a business lawyer, worked really hard, was like a very, very like driven guy, but had a levity to life and just always insisted on taking the scenic route. Like if we were driving, I'm from Vancouver. So if there's an opportunity to like take the street by the water or go the slightly longer way to enjoy a view, he did it every single time, which I thought was a really interesting juxtaposition from like him as a business guy. And so I'm trying to take the scenic route more now. So
Uh,
I'm
sound
glad we could sneak this in. I think this is
nah. I was gonna add. I was gonna say. I think your father had sound advice. Something that we could all, as I'm staring out like at a farm here, something we could all think about a little bit more. How do you take the scenic route and just enjoy life, man? That's beautiful. Thanks for sharing that.
yeah, especially in our line of work. It's tough to slow
Oh,
down, tough to enjoy things, and I'm certainly trying to do it. Well, Tom, this
yeah.
was awesome, man. I appreciate you
Thank you.
joining. This was a great discussion. I knew it was going to be good when I saw your pre-call notes. So appreciate you doing it, and yeah, good luck getting back from pat leave.
Thanks, brother. Appreciate you. Thank you, and good luck with everything on your end as well. And I'm sure we'll be in touch one way or another. So, take
Yeah,
care.
yeah. Thank you for listening to the Revenue Leadership Podcast. If you enjoyed it, don't forget to subscribe, and you can find a link in the show notes. And be sure to leave a 5-star review, share it with your network, and please join me next Wednesday for another great conversation.